Well, hello, folks out there in YouTube land. Got a bad fourth quarter earnings results. Gonna go over it. Can't say a big show, but it's a show. So let's get into Facebook. All right, let's pull up this screen. ARG, Facebook, fourth quarter earnings, and oh crap, danger Will Robinson.
Danger, Will Robinson. Danger. No, Will Robinson. Danger.
This is not good. Crap. All right, folks, time to pull off the Band-Aid. It says Facebook shares plunge more than 20% on weak earnings, big forecast miss. And it's that forecast miss that's got everybody freaked out. Now, realize this is Facebook, so their idea of something terrible means it's not great. Oh, no, we only have something good to say. But good doesn't get it done for Facebook. It says Facebook earnings came in below expectations. And unfortunately, said the company said numerous challenges are ahead in the first quarter. And that does not shock me. Inflation. Oh, but it's transitory. It's no problem. Remember, Janet Yellen said it. Chairman Powell said it. So it can't be a problem. Supply chain disruptions. Advertisers and users shifting to products that monetize at lower rates are among the key issues. Revenues in the first quarter will be between 27 and 29 instead of the 30 that's expected or was expected. Earnings per share of $3.67 instead of $3.84. Revenue was actually a little bit higher than expected, 33.6, 33.4, but their daily active users missed what they were expecting, 1.93 versus 1.95. Same thing with active users. And actually, they did okay on the revenue per usage. But unfortunately, again, the first quarter, they're just not over expecting. All right, so let's look at this fourth quarter. There it is. There's the total revenue, cost and expenses. There's their income. So, I mean, they're making good money. It's not like they're always making money, but not as good as they expected. And so that's got some people upset. But it's really the first quarter that they're most concerned about, basically calling for lower numbers than expected. And like I say, if they did 33.6 and now they're calling for 28. Now, granted, the first quarter is never going to be as good as the fourth quarter, but, you know, it's a problem when you don't see a ton of growth with Facebook. Other problem is their operating margin went from 46% to 37%. So their operating margin dropped. Not good. So let's take a look here at the chart. And this is one of my holdings that I've had for quite a while. You can see where I've been buying all the way back in here. Back around 215, I think was my first buy. And I bought all the way up to around 290 something. And about 2 weeks ago, I sold a little over a third of my holdings in Facebook. And it was because I just have a bad feeling about this market, and I have for months, but the last couple of weeks got real bad. So I don't think the pain is over by any stretch.
Pain.
And like I said, this was an insurance play on my part to sell like a third of my Facebook just in case. And if it did pull back, then I'd buy more. Well, I'm going to give this a little bit of time because I don't like this. I don't like their expectations the first quarter. That concerns me. You know, this is a company that needs to grow, and because everybody's used to it. So now we're sitting here. We've pulled down. Oh, let's see. Where are we at? All right. So this is basically, it's not showing, but 249. Well, it does show 249. So we're going to open about right here, just depending on what happens pre-market. So that's a heck of a drop. Let me get rid of this. All right, so Facebook pulling down over 20%. So I'm going to be, looking to buy some of this stock at some point. It probably won't be tomorrow. It might be if things calm down in a week or two. I've got money put back to buy Facebook, and I was going to buy it back if it stayed, around 300, but I had it ready just in case it pulled down, and I was basically looking for maybe a little move towards recession, a little small recession, and we may be heading to that. It's hard to say, but, it's pulling back pretty hardcore. So I'm just going to put it on my watch list right now, and at some point I will buy it back because Facebook is just super profitable, great balance sheet, huge name, FANG stock, but they're not above taking a hit in this environment, and that's what I was concerned about. So we've seen it with Netflix, we've seen it with Facebook, we've seen it with all the high growth stocks. and Facebook is not immune. So there you go. All right, folks, you probably didn't, if you go on Facebook, you probably didn't appreciate this video very much. I didn't appreciate doing it, but it had to be done. But anyway, if you didn't, crap, how do I say this? Normally I say if you like this content, be sure to hit that like button. Lets me know to continue to cover Facebook. What if you didn't like it, but you do want me to cover it? Still hit the like button, and I'll cover it. That's how I'll say it. And if you haven't subscribed, even though you're angry, go ahead and subscribe anyway. And I hope you didn't dislike the content too much. And we'll see you next time on Mr. Frugal Investor.